Unlocking growth, investing in NVIDIA ETFs for future technology trends. Welcome back, ETF enthusiasts, to another exciting episode of Chat ETF, your go-to channel for all things related to exchange-traded funds. Today, we're diving into the world of tech investing and exploring the potential of NVIDIA ETFs. Are you ready to supercharge your portfolio with the powerhouse that is NVIDIA Corporation? But hold on, why settle for just one stock when you can unlock a world of opportunities with an NVIDIA ETF? In just a moment, we'll uncover why investing in these ETFs could be the game changer your investment strategy needs. Stay tuned as we break down the advantages, risks, and key considerations of investing in NVIDIA ETFs. Plus, we'll reveal the top ETFs holding significant shares of NVIDIA stock, giving you insider insights into the best picks for your portfolio. Don't miss out on this exclusive deep dive into the future of tech investing. Hit that subscribe button and ring the notification bell so you never miss an update from Chat ETF. Let's embark on this exciting journey together. Question 1. What is an NVIDIA ETF? An NVIDIA ETF, or exchange-traded fund, is an investment vehicle that tracks a basket of securities, not just a single company like NVIDIA, NVDA. While there isn't an ETF dedicated solely to NVIDIA, several popular ETFs hold NVIDIA stock as a significant holding, offering investors indirect exposure to the company's performance. Question 2. Why would someone invest in an NVIDIA ETF instead of just buying NVIDIA stock? There are several reasons why an investor might choose an NVIDIA ETF over individual NVIDIA stock. 1. Diversification. ETFs provide instant diversification, spreading your investment across multiple companies in a single purchase. This can help mitigate risk, as the performance of one company won't significantly impact your entire portfolio. 2. Lower cost. Depending on the brokerage, purchasing shares in an ETF might be cheaper than buying individual stocks, especially when considering transaction fees. 3. Convenience. ETFs trade like stocks throughout the day, offering greater flexibility and liquidity compared to buying and selling individual company shares outside market hours. 4. Sector exposure. Some ETFs holding NVIDIA also focus on specific sectors, like technology or growth, allowing investors to gain exposure to a broader theme, while still benefiting from NVIDIA's presence. Question 3. Which ETFs hold the most NVIDIA stock? Several ETFs hold significant amounts of NVIDIA stock, but the top 3 are 1. SPDR SP500 ETF Trust, SPY. This is the largest ETF in the world and tracks the SP500 index, which includes NVIDIA as a major holding. As of February 2024, SPY holds over 27 million shares of NVIDIA, representing roughly 2.81% of the ETF's total holdings. 2. Invesco QQQ Trust, QQQ. This ETF tracks the Nasdaq 100 index, which also includes NVIDIA among its top holdings. QQQ currently holds over 14 million shares of NVIDIA, representing approximately 2.45% of its total holdings. 3. VanEck Vectors Semiconductor ETF, SMH. This ETF focuses specifically on the semiconductor industry, with NVIDIA as a major component. SMH holds nearly 5 million shares of NVIDIA, representing around 5.9% of the ETF's total holdings. Question 4. Are there any other factors to consider when choosing an NVIDIA ETF? Besides the percentage of NVIDIA holdings, other factors to consider when choosing an NVIDIA ETF include 1. Expense ratio. This is the annual fee charged by the ETF to manage the underlying assets. Lower expense ratios are generally preferred. 2. Investment objective. Different ETFs cater to various investment objectives. Some focus on growth, income, or a specific sector like technology. Choose an ETF that aligns with your overall investment goals. 3. Total holdings. While NVIDIA might be a significant holding, consider the other companies within the ETF and their alignment with your investment thesis. 4. Past performance. While past performance is not indicative of future results, it can offer some insight into the ETF's historical volatility and risk profile. Question 5. What are the potential risks associated with investing in an NVIDIA ETF? Investing in any asset, including ETFs, carries inherent risks. Some risks specific to NVIDIA ETFs include 1. Market risk. The overall stock market performance can affect the value of any ETF, including those holding NVIDIA. 2. Sector risk. If the technology sector, or specifically the semiconductor industry, experiences a downturn, it could disproportionately impact the value of an ETF like SMH compared to a broader market ETF like SPY. 3. Concentration risk. While diversification is a benefit, some ETFs with less diversification, like SMH, hold fewer companies, increasing your exposure to specific industry risks. 4. Tracking error. The performance of an ETF might not perfectly match the underlying index it tracks, resulting in a slight deviation. Question 6. What does the future hold for NVIDIA and its associated ETFs? The outlook for NVIDIA remains optimistic, driven by its strong product portfolio and expanding market opportunities. As technology continues to evolve, NVIDIA is well positioned to capitalize on emerging trends such as AI, autonomous vehicles, and edge computing. However, investors should remain vigilant and adapt their investment strategies accordingly to navigate potential challenges and seize opportunities in this dynamic landscape. Here's an analysis of potential factors that could impact NVIDIA and its associated ETFs. For NVIDIA, 1. Market trends. Continued growth in sectors like artificial intelligence, AI, data centers, and gaming could benefit NVIDIA as a leading provider of graphics processing units, GPUs, crucial for these technologies. 2. Competition. The semiconductor industry is highly competitive, and companies like AMD and Intel could challenge NVIDIA's market share, impacting its growth and stock price. 3. Economic factors. A global economic slowdown or recession could decrease demand for NVIDIA's products, affecting its financial performance. 4. Technological advancements. Disruptive new technologies or alternative solutions could potentially render NVIDIA's current products obsolete, impacting its future prospects. 5. Regulation. Increased government regulation in areas like antitrust or data privacy could affect NVIDIA's business operations and profitability. For NVIDIA ETFs, 1. Performance of the underlying index. The performance of NVIDIA ETFs will be heavily influenced by the performance of the underlying index they track. If the SP 500 or NASDAQ 100 perform well, it would likely benefit their respective ETFs holding NVIDIA. 2. Changes in the ETF composition. The fund manager might adjust the holdings of an ETF in line with changes in the underlying index, potentially increasing or decreasing the weight of NVIDIA within the ETF. 3. Investor sentiment. If investors become bullish on the technology sector, or NVIDIA specifically, it could drive up the price of NVIDIA ETFs, regardless of the company's individual performance. 4. Competition in the ETF market. New ETFs focused on specific themes like AI or semiconductors might emerge, attracting investors and potentially impacting the popularity of existing NVIDIA-related ETFs. And that's a wrap on today's exploration of NVIDIA ETFs. We've uncovered the potential of these dynamic investment vehicles and how they can supercharge your portfolio for the future of technology. Remember, diversification, lower costs, and sector exposure are just a few of the many benefits of investing in NVIDIA ETFs. Whether you're a seasoned investor or just starting out, these ETFs offer a gateway to the exciting world of tech innovation. If you found this video helpful, be sure to give it a thumbs up and share it with your fellow investors. And don't forget to subscribe to Chat ETF for more in-depth discussions on ETF strategies, market trends, and everything you need to know to take your investments to the next level.